Hi traders, thanks for stopping by thetradinganalyst.com. This is Taylor and we're going to take a look at the S&P 500, Dow Jones, Nasdaq, as well as the IWM Russell 2000. And I'm going to give my analysis, thought process, and you're going to walk away from this video with some newfound knowledge on technical analysis as well as some profitable trade ideas here on the market itself. But first, if you're not already a member at thetradinganalyst.com, visit us on the homepage and get to know us a little bit better. If you like the free videos and analysis we give to you on a daily basis, it's nothing in comparison to the membership at thetradinganalyst.com. The best part is, once you sign up with your free 7-day trial, you're going to gain instant access to the private Twitter feed, the daily watch lists, the real-time profitable trade alerts that are not only given in the private Twitter feed, but also sent directly to your cell phone via text message, so you're never going to miss an alert or a move in the market. You're also going to gain access to the exclusive daily member videos, webinars, and an education from mentors like myself who truly care about your success in the market. It's a great opportunity and we'd love to help you. Alright, so let's take a look at the S&P 500 to start here. And we have been mentioning the support break. We got that support break, 23.54. And as you can see, we've got not only this day was the initial break right here, but we've got 2 other days, so 3 days hanging out below this support right here. So to me, it looks like it's just kind of digesting the losses here that we made right here with some little bit of sideways trading. You can see we got rejected at that price point. Either way, this is definitely something that concerns me on the long side, and I'm a little more cautious, and that's what we're kind of advising people at the Trading Analyst to do. We've only got one position on at the Trading Analyst, and it is a short position, but we're really treading lightly at the moment, just because we are seeing some market weakness right here, but again, it's not super weak. It's just something to make you pull back the brakes a little bit on the long side and play a little more defensively, and it's working out very nicely for us because we had several weeks of some really nice gains. So the most important part of trading, and I know I'm getting a little bit on a soapbox here, but it's very important. The most important part about trading is not only making those gains, but it's also keeping those gains. So if you have a nice week or 2 or 3, you don't want to go into the next 2 or 3 weeks and get sloppy and then just wipe out all those gains. You want to keep those gains and then pounce when the next good opportunity comes. So from our perspective, there aren't many great opportunities really on either side of the market. We have a little bit of indecision right here, and it is looking like we are going to be headed lower here. Our bias is a little bit to the downside, but again, nothing too strong at this moment to really warrant to be putting on heavy positions on the short side. So we'll see where it goes, but getting back to the chart here, we're below the support, and even if we do kind of break back up here, we still have this high here, lower high here, and you can see here's a low, and then here's a lower low. So even if we do break back up here, we'd really have to breach this high right here in order to make a higher high. So even if we do break back up, we've got this downtrend line that's going to act as resistance near about 23.74 approximately. Okay, so that's the SPX. We'll take it to Dow Jones now, and the Dow Jones, really similar look, so we don't need to discuss it too much, but the levels are a little different. So we've got some support right here that we've been mentioning. It was this little mini support based off of these few days here, and it looks like we did get that bounce off of that level here, and it is turning into a bigger support because of how it's reacting to it. So as I mentioned before, we got to these levels, I said this was a little tiny support, and not to really, for me personally and my style, I wouldn't want to just front run a bounce and play the support level, just because it's only 3 days of support, so not a huge level here. I really want to see a level get touched several more times than 3 times in order to play a bounce off of it, and that's just my personal preference. Could work different for you, but regardless, here we are at this support. It's turning into bigger support because we've got 1, 2, 3 touches against it right here, but then now we have this resistance above us, 28.40 right here. So that was that support break. You can see it was resistance here. That resistance turned into support as we got several bounces right here, and then we broke it on this day. So now this level is going to be a resistance, 28.40, and that's right around where that downtrend line is going to be that started right here. You can see several rejections right there, and you can see, same as the SPX, got a high, lower high right here, lower low right here, and a lower low right there. So we're in a little mini downtrend. I know, obviously, if you back up the chart here, we are in a major uptrend right here. Okay, so I know, let's keep it in perspective. Okay, but in this short term right here, when you zoom into the more recent action, we are in a little mini downtrend right here. So it's definitely some levels you want to be aware of. All right, so next one we're going to touch on is the Nasdaq. Nasdaq, another similar look right here, and this is a big bearish engulfing candle. Okay, this is not friendly action to the bulls, and that's not what you want to see if you're bullish on the Nasdaq. And not only did it bearish engulf this day right here, but it engulfed this entire range right here. That is a huge day. Okay, that's a huge day. This is a range from about it was just about 1 month exactly. 1 month exactly of a sideways trading range, and we just blew that range in 1 day. We went from the top of the range all the way to the outside of the bottom range right here. We made a new all-time high, and then we ended up closing below this month-long range. I mean, this is bearish action. You don't really need to be an expert to really know this, and it's definitely something that is going to take some time to work off. So we've got, and what I mean by that is it's going to take some time to undo this damage. So more than likely we're going to head lower here on the Nasdaq. That's my bias personally, and you can see that we're just hanging out below the support level that we broke. So we broke it on this day, tested it here, another test here, and below us I don't really see much support until about 56.70. You can see we had these highs here, right there, right there, right there, finally broke over it, but that level is going to be a level of support. 56.70 is going to be that level that we could get some kind of a bounce here in the short term. And next we're going to cover the IWM here, and what I want to point out is nice action since this rejection right here. If you've been following along the videos, you know that we liked IWM for a short up here. That was a perfect call, and congratulations if you followed along. Just to reiterate why we liked it for a short here, well, because we had this resistance right here, 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 finally broke over it, was hanging out above it, and then we broke back below it significantly. And to me, this is a clear rejection of these higher prices right here, because we couldn't sustain them for very long and broke back below. So a short on the retest of that level, as well as the gap fill right here from this gap down that occurred on that day, as well as the Fibonacci retracement level of 61.8. You can see that right there, 61.8, from the highs here to the lows here, and that gave you the 61.8 Fibonacci retracement level that matched up with the gap fill, which also matched up with the retest of that former support, which now turned into resistance, and we headed much lower after that. So that was a big win, congratulations if you followed along. Now we're looking at IWM here in the short term, and it looks like IWM wants to bounce here in the short term. Keep in mind though, we've still got some bearish characteristics up here with this big down day right here that again broke out to these highs and then broke below these multi-week lows. So same thing as the other ETFs. So you definitely want to be kind of a little bit cautious, in my opinion, on the long side, but definitely think we can get a bounce here. This is a big level of support, like we mentioned before that happened. We mentioned that level when we were up here before we reached this level. So if you followed along, you should know about these levels moving forward. So now looks like we can get a short-term bounce at least here because of this hammer candle right here, and then we closed over the previous day's high right here. So definitely some action that to me looks like we can see some short-term upside on the Russell 2000. Thanks for stopping by and watching the video, everyone. Again, if you're not already a member at thetradinganalyst.com, you are missing out. Visit us on the homepage and get to know us a little bit better. If you like the free videos and analysis that we give to you on a daily basis, it's truly nothing in comparison to the membership you get at thetradinganalyst.com. The best part is, once you sign up with your free 7-day trial, you're going to gain instant access to those profitable trade alerts that members are getting on a daily basis. It's a great opportunity, and we'd love to help you.